let's move on. Motilal Oswal's recent theme is contrarian investing. They've come out with a recent report where they explain it pays to be different. The report covers two major themes based on consensus rating and valuation multiples. To tell us more about this theme, we're now joined by Gautam Duggad, the Head of Research Institutional Equities and the author of the report at Motilal Oswal. Hi Gautam, good morning and thanks so much for joining in. Very briefly, if you could explain what the theme of this report is and how can we apply it in the Indian markets in terms of picking the right stocks.
Sure. Good morning. So today, popular perception, if you see in India, has always been that the growth investing, which is a predominantly working theme. And given where markets are at today, 9,600, 9,700, a lot of the usual sectors have done exceedingly well. The same set of stocks have provided excellent returns in the last 2-3 years. Valuations being where they are, in a way it shows that there's a lack of, or rather the growth is not broad-based, and that is in a way reflecting in the way market is behaving. So we thought at this level of market, it will be very interesting to look at some alternative frameworks to find out if there are more ideas which can be gleaned, which have not been very popular in the past. And that is what has driven us to apply this framework to the Indian markets. Now, contrarian investing has been a very popular theme globally. We thought we'll just see whether it applies to India or not. And the way you summarize in the beginning, those are the two buckets within which we have looked at contrarian investing in India. One is obviously the popularity of the consensus rating on the BSE 100 stocks, and we have backtested last 10-12 years of performance on a quarterly rebalancing basis. And second theme we have looked at is the valuation multiple, and of course there are several sub-themes within each of those themes. So net sell to net buy, consensus sale. There are three buckets we have looked at in valuation: price to earning, price to book. So those are a mix of things that we have looked at. The approach has been more data-driven and con-driven, without allowing any inherent biases to basically creep into this analysis. And as you can see, most of the ideas that are mentioned there today, they're not very popular. But if you see the data of the last 10-12 years, applying this framework has helped in India.
Gautam, good morning. I take that point that this is completely free of bias, because I'm looking at your top contrarian sales, and some of them are the ones where we have seen huge bull calls from Motilal Oswal, and we have seen, of course, money being made there. The likes of Eicher Motors, Bajaj Finance, Escorts. But problem here, Gautam, is that we've seen how liquidity can sometimes throw valuations out of whack. Is that a risk to some of your sell calls as well?
Yeah, so before I mention that point, just a normal disclosure which we have given even in the report. Some of the ratings which are mentioned in those calls may not necessarily be in consonance with the bottoms-up rating that the analyst team may have. This is clearly a very top-down approach based on data and cons. Now, coming to your second point, I concede that liquidity has driven this market for the last 12 odd months. But if you look at markets from a longer-term perspective, it has always followed earnings. There have been times, there have been periods, there have been bunch of 3 years, 4 years where liquidity as well as fad has allowed few sectors to trade at valuations which are way above what they've usually traded at. Now, what are those sectors in the last 8-10 years? One obvious is consumer. Consumers P used to be 20 times 10-8 years back. It is at 35-40 times depending on which set of stocks you look at. So yes, at times it will play havoc with your fundamental thesis or even your valuation-driven traditional approach. But end of the day, over a long period of time, I don't think, of course, there is a limit beyond which a valuation can re-rate. It has to follow up with earnings, right? And we have seen multiple times, there are evidences in the last 10-15 years where valuations have reverted to mean. Valuations do not go just one way. They have reverted to mean in multiple sectors in the last decade or so.
So, Gautam, I noticed a fair amount of interesting stocks in your contrarian list: Axis Bank, PNB, Idea. But I think the two ones that really caught my eye was Sun Pharma and Tech Mahindra. These days, nobody really wants to buy these kind of stocks. So let's get your sense. Why these two?
Yeah, nobody wants to buy. That's why it's contrarian. Now, you look at pharma sector as a whole. In the last 2 years, the kind of carnage that we have seen in pharma, earnings as well as valuations as well as the stock prices. All the large top 4 pharma have underperformed significantly in the last 24 odd months. Now, we are not saying that all of them have become buy because there are various stock-specific, sector-specific factors at play. One of the stocks that we have highlighted, as you mentioned, is Sun Pharma, and this is where we have the highest conviction on from a longer-term 3-year, 4-year perspective. Now, things may not recover immediately in the next 3 months, 6 months. There are multiple issues at play. There is GST, which is being implemented from a domestic market point of view. There is buyer consolidation, which is happening in US market. There is a pricing pressure, base price erosion. All of those factors are well known, and which is why this stock is trading at a 30% discount. We think that this is a great opportunity to get into this name from a 2-year to 3-year perspective. Coming to Tech Mahindra, obviously another sector where things are looking very pessimistic. People do not want to look at those sectors. And if you see in that report, we have highlighted 2 or 3 sectors. We have given a call that pharma is a contrarian buy sector today at this point of time, whereas technology, in our view, is not yet a contrarian buy as a sector. But there are obviously stocks which are trading at a substantial discount to their long period average valuations. And even there, we are not saying things will improve in the next quarter or quarter after 2. But can you buy today and hope that the downside is limited? The answer to that is yes. You may not derive significant outperformance buying those stocks today, but clearly we think that from a 2 to 3 year perspective, these are interesting levels to look at.
Okay, Gautam, I take your point. You know what? We need to take a break, but stay on. We'll come back and continue our conversation. Welcome back. We'll keep one eye on the GTPL listing, which will happen, but we have been in conversation with Gautam Duggad. Gautam, the one that really stands out for me in your contra list is Bajaj Auto. I mean, and the stock has done well. Why I ask you this is Hero MotoCorp has got its rural piece going. TVS Motor has made a huge comeback. Eicher Motors, we all know, is in the premium segment and doing well. Bajaj, nothing is clicking right now. The export piece also not doing that well. Why is it a buy for you on these parameters?
Yeah, so there are 2 aspects. Sure, there are 2-3 aspects on that. One is the stock is at a significant discount to the sector average as well as its own average. That is as far as valuation is concerned. Second, as far as fundamentals are concerned, I think I've listened to the management commentary yesterday on your channel. They're talking about exports stabilizing. Last month was around a run rate of around 2 lakh. And similarly, I think in the next 6-7 months, you will see export strategy also playing out for them, where things may not improve significantly, but they will stabilize. Even on domestic front, I think they have taken GST, pre-GST price cuts a month back. So therefore, the volumes for the month of June were disrupted to an extent. We expect volumes to pick up from where they are right now. Now, one of the common theme which you would see through most of the stocks is none of those stocks have any thesis which are going to play out in the next 3 to 6 months. And by virtue of that, they qualify for contrarian investing. But at the same time, we think that fundamentals have not dislocated completely. For example, in Bajaj Auto, there has been concern on exports for many years now. This is not the new concern which has emerged. But incrementally, we think that the things will pick up from where we are, both for domestic as well as their export front. And secondly, valuations does allow you to take some risk, given that you're not buying at 30p or 35p for most of these two-wheeler stocks, except the ones you mentioned.
New listing has happened. It's quiet as was expected. 170. Okay, now it's actually just turned positive. 171. First green tick on GTPL Hathway, a subsidiary of Hathway, having substantial, of course, holding in that company. Looking at raising money to pay off a fair amount of debt. Right now trying to stabilize just around the issue price. Gautam, quick sort of question from my end on 2 of the banking stocks that you've picked in this contrarian list. There's Axis Bank out there and there is also PNB. So just quick rationale?
Yeah, so in both the cases, first is obviously the valuations. They are factoring in a lot of stress already in the price. Second is incrementally, we think with all the actions that RBI as well as the regulator has taken in the last couple of days, incrementally things should improve for the sector, whether it is corporate facing private banks or whether it is PSU banks. And therefore, the idea here is that to look at the stocks which have been forgotten for last many quarters, many years, they are offering you an opportunity to look at it in the broader macro environment where the regulator as well as the government has taken the mantle upon themselves to improve the asset quality situation for the entire sector as a whole. Because from a big picture point of view, unless and until these things are resolved, I don't think you're going to see any significant and sustainable revival in growth. So that acts as a sort of a cushion for the stocks. And obviously in the last couple of years, the stocks have underperformed significantly. So that allows you some sort of a shield from valuation, given that rest of the stocks, whether it is in private sector or even in NBFC, they are not allowing you any valuation comfort today.
Okay. Gautam, thanks a lot for your time today, and thanks a lot for taking us through that interesting research report that you've come out with. That's, of course, the contra calls. And as Gautam clearly pointed out, with the disclosure that it's got no relation to the kind of thematic coverage that they have in a lot of stocks. For example, they have a lot of buy calls on some of the stocks that were discussed, but were part of this contra list. This is based on top-down contra approach that they've employed. By the way, let's just get back to GTPL Hathway, because I think it opened in discount, but